On today's video, it's a fun segment of brokers behaving badly. Well, not for those who maybe fell victim to this person, but we're going to talk about the millions that were embezzled to bet on sports by an advisor. It turned into paying down loans. This happened in Indiana. We're going to talk a little bit about, just unfortunate when these things happen, just how common they are, and hopefully give you a few tips for spotting an advisor who might have a lot of red flags about them so that you don't have to fall victim to any of these scams. Let's talk about it on today's video with Janine Theus. All right, Janine, we're talking about a scammer, a bad advisor, and some folks that unfortunately lost a lot of money in this situation today. We've got the article pulled up. We're going to be kind of looking at it as we talk a little bit about it and then get into some details about how folks can avoid scams like these. But I feel like you're coming across these articles yourself all the time, right?
Yeah, it's really amazing how, well, I guess amazing is the wrong adjective.
Right.
It's sad and disturbing how many times just last year and this year this has happened. Just in 2 years of following it more. I mean, we got investor advisor magazines and financial advisor magazines, and they report on some of the cases that are, the SEC is taking, or the FINRA, the state agencies are taking against advisors. It's rather shocking, actually.
Yeah.
And this one, what was this guy thinking?
Yeah. Well, let's break it down. I'm hoping the red flags will be pretty obvious for us to discover and point out. All right. So this is on Fox 59. It's about Indianapolis area crime here. A Carmel-based financial advisor, and that's not the candy. That's a town in Indiana. A Carmel-based financial advisor. Well, that would be very interesting, wouldn't it? A Carmel-based financial advisor?
Yeah.
That's interesting. Carmel-based financial advisor embezzled millions from a client, used money to pay down loan, and bet on sports. So this former advisor pleaded guilty to embezzling millions of dollars from the client, using that money for what we mentioned, the sports and the personal loan pay down. This was Christopher Turion of Fishers, pleaded guilty in federal court to one count of wire fraud and one count of filing a false tax return as well. So check this out. Part of the plea agreement, he agreed to pay over $4.5 million in restitution to the victim, along with another almost $2 million to the IRS. And it could carry a prison sentence of up to 20 years, although at the time of this article, a sentencing date had not yet been sent. So here's maybe where this all transpired, maybe where we can pick up some red flags. So he was working as a certified financial planner, which, Janine, let's just start there. Like, that's supposed to be the end-all, be-all. Like, I've heard people say before, if it's a CFP, like, you got to go, that's the way to go. You got to go with a certified financial planner. Well, that doesn't give you any guarantees the person's not still going to be a shyster, right?
That's exactly right. That is exactly right. And in fact, about 2 years ago, I distinctly remember reading an article that some 40 plus CFPs were basically fired and banned by FINRA. So, that just speaks to certifications are not always guarantees that your money is going to be safe.
Ding, 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 ding. So there's first lesson of the day, right? Still got to evaluate an advisor on a personal level and make sure that you're really working with somebody that you can build that trust with and have a good relationship with professionally. So according to these court documents, here's how it all began, Janine. Turian began transferring money out of his client's investment account in 2019. He set up an LLC with this name, SCNT LLC, and transferred the money into a bank account under the fraudulent business's name. So couple of red flags, right? If your advisor's transferring your money out of your investment account to an LLC that he set up, we're probably already got a couple of red flags popping up, I would imagine.
Oh, absolutely. So here's something to consider. Clearly, he had access to the client's money. So that means that there was probably a limited power of authority given to the advisor to trade on the account. So the way we set things up, and this is a safety measure, is you have a custodian that holds the money. you have a money manager, and it can be, it can be in-house or third-party asset manager. And then you have the advisor on top who advises on all of this. So there are layers, and nobody touches any money without permission or directions or instructions. So there's a signature required to move money in out. Okay. In this instance, he had access to the money.
Yeah.
So then the question is, how was that direct access given? Well, most likely the client gave him an LPOA. That's not a bad thing necessarily. It's just, if you do that, you need to keep track of the ins and, the goes intos and goes outas in your account.
Right. And so this goes on. So like all of this is happening, and this guy is betting on DraftKings and FanDuel, putting money into the sports betting sites. He's also doing a home equity line of credit that was tied to his personal residence. More than $1 million of his client's money went into that. Meanwhile, he's telling the client that he's investing in real estate for the client. And he concealed all of this embezzlement from the parent group, the Vallejo Financial Advisors as well. So, not only kind of messing over the client, but the business that he's working for, just all sorts of bad wrapped up in this. So, but this would be another maybe lesson or red flag, right? Like if somebody tells you you're investing in real estate,
well,
show me the real estate.
Well, so there are many ways to invest in real estate.
True.
But there are a lot of documents associated with that. So who signed the documents to quote, should you have asked for, how is he doing this, investing in your name?
Yeah.
And was he setting up some index fund or something, that some REIT, real estate investment trust? So clearly the client was not educated on some of the finer points of what the investments actually were that allowed him to do this. And clearly this guy's got a lot of money that he can just turn around and pay these fines. He's probably going to spend at least 10 years in prison. But can you make the client whole? But the company itself that he was working for, where was the supervisor?
Yeah. That's a good point.
So
you're saying that should be caught as well.
Yeah. So there needs to be some supervision on money moves. And then we talked about this a little bit in one of the previous episodes. Never, ever, ever write a check to an advisor. Mm-hmm. Ever. You can write a check to the company that the advisor owns, or to the custodian for the benefit of you and your account. But what happened with Bernie Madoff? Everybody recognizes that name. And since Bernie Madoff was such a huge Ponzi scheme, you would think people would be more attuned to that, but they're not. Lots of Ponzi schemes happen, almost every year. So people are convinced, cajoled, pressured into joining this exclusive group and being part of this scheme or part of this investment, if you will. And they write checks to the person, and there goes the money. So you really, really have to pay attention to what's happening when you write a check with that money.
The end of the story is that he embezzled almost $5 million total, and not a single dollar of the money was used for investment. All of it was spent on those personal expenses for the advisor. So just bad stuff all the way around there. It ended up going on for 2 years. Luckily, they caught him, and they're prosecuting him and putting him through the system, which is good, so we can't hurt anybody else. But clearly that client hurt for probably ever. So some good lessons there, Janine. Don't write checks directly to the advisor, as you mentioned. Make sure that if it's involving an LLC getting set up, I mean, these are all sorts of things where you need to start involving other people into the process to help be the double checker for you. And that brings up a good point. Is that a pretty good tip for how to avoid being scammed? Like if that internal bone starts shaking a little bit, bring someone else to the meeting with you, have them participate and say, is this
Yes.
Is this right?
And here's the other thing. If you don't understand the investment, then you need to ask yourself why you're investing. Yeah. Now, it can be complex. Investing can be complex, but it doesn't have to be. There are ways to invest based on the research. Simply, it's easy to understand. If the advisor can't explain that, find another advisor.
Yeah. And it seems to me like getting a second opinion would be another good tip for somebody here too.
Right. But typically, the The greed part, it's fear and greed that sway people. And one of the greed stories is somebody promising you a 12% return every year. Well, such an animal does not exist. And so the market moves constantly. So you can get 12% in 1 year. You're not going to get it. And it's unlikely that you're going to get 12% in it. It's not linear. The market is never linear. So anybody that promises you or says there is a guarantee, you need to be suspicious of and ask for more explanation.
So anything that the old rule, if it sounds too good to be true, probably is another one of our lessons from this.
Yeah.
Very good. Well, great breakdown. Unfortunately, it happened, but hopefully by us talking about it and bringing awareness to it, please heed the warnings. Don't let yourself become the next victim to one of these scammers out there, making sure that you're getting a second opinion if something doesn't feel right, that you're asking the proper questions throughout the process, and not just handing over all of that power without really understanding exactly what's going on in the situation. So if you need help analyzing that, if you need a second opinion on your financial plan, even if it's not, I think I'm being scammed, but maybe you're just not sure that you've got the right financial plan in place, Janine Theus will be happy to meet with you or have an initial conversation with you to see if you'd be a good fit to work with one another and give you a second opinion on your financial plan. You can reach out anytime online at theuswealthadvisors.com or call 443-718-6311, and we've put that contact information in the description of today's show so you can find it easily. Janine, thanks for all the help on the show today and for breaking down this article with us, and we'll talk to you again soon.
Thank you very much. Talk to you soon, Walter.
See everybody next time on Rockin' Retirement.
Information is for illustrative purposes only and does not constitute tax, investment, or legal advice. Always consult with a qualified investment, legal, or tax professional before taking any action.